Hi everyone, hope you're doing well. Today I'm going to talk about a very well requested video yesterday, which was Enphase. So today we're going to take a look at Enphase and see what's going on. As I'm recording this video, I don't have the open up today yet because I'm recording it quite early, but right now still showing yesterday's move, which was Enphase down a whopping 93.97%. Let's just call it 94%, down 94% yesterday. So yeah, really big move. Imagine, sometimes you just put that into context. Imagine that, waking up the next day and your company is worth 25% less than what it was yesterday. Like imagine that, like your car being, next day you wake up, oh, by the way, your car's worth 25% less, or your house. Just that's the stock market, guys. It's crazy, isn't it? Because the stock market is that you can all of a sudden get these big moves where big valuations are moved off in the stock market, and sometimes they can create opportunities, which we'll look at Enphase today and see if that is an opportunity. But also sometimes the frustrating thing can be is that you can wake up and you see this amount moved off your stock valuation, and sometimes to get the stock to go up 25%, it can take days, weeks, years sometimes to get that up there, and then you see the bigger moves on the down days, don't you? Some days, you wake up and see those big moves like you did with Enphase. But Enphase overall, yeah, it's been a pretty ugly year for it, to be fair, down 51% year to date. And it's a stock I own. It's a stock that I think I've said to you multiple times is that it could be a choppy year. Now, I actually didn't think it would be this choppy. Like, I knew this stock probably had the ability to go down 20-30% since I started buying it. But right now, I think I'm down like 45% on this position. So this has gone down way below where even I thought I would buy it. And I knew it was going to be a choppy ride for the next 12 months. But I didn't expect it to go down this much. And that's what it's down at the moment. So we're going to take on like my updated thoughts about what's currently going on. In case you don't know why the stock went down. So basically the new budget bill went to the Senate. People were maybe hoping the Senate was going to change it slightly, and it didn't really. So the information on the Seeking Alpha article actually wasn't that good. So what I did is I actually went up and got the bill for you guys. So if you go on to, I think it was I might be wrong here, but if you do go on the bill, I think it's page 274. They do have what they're going to talk about, the energy situation. So the plan is that they're going to, at the moment, so 2025, no change. So we won't see any change to the credits for the rest of the year, which is actually pretty positive and a big change from what I think was in the previous one. And then from 2026, we're going to see a reduction down to 60%. In 2027 down to 20%, and then going past into 2028 down to 0%, a complete reduction. So a slight improvement from what we had previously. Clearly, maybe the reason why the stock market is going down is because maybe they hope for something better, but it was slightly better than what there was previously. So that was kind of a bit of a shock to see how much it had gone down, because what you would think like the worst case scenario would have been baked in with the last batch of information that what potentially could happen. Now it's gone through the Senate and it's actually, a little bit better. I thought the stock maybe would be actually green, to be fair, but obviously, it's not. And, big reduction on what the credits are going to be going on here. Now, my initial thoughts when I looked at this is, one of the big key things is that when we actually reduce into 2028 and it will go down to zero, well, by then we're on a presidential election year. So depending on how things are going, and I'd say at the moment with how things are going, I would assume that it's definitely not going to be a Republican majority. By then we probably will be on the Democrats, and as we know, Democrats are a little bit more positive to solar energy, and yeah, maybe in a year's time we wouldn't have to wait that long until we see some more support coming in from the Democrats for the solar energy. And that's why I don't really try plan things too much on political parties, because things can change very quickly from a 2-3 year period. I want to buy for the core reason. And when I buy for the core reason, when I look at Enphase, the reason why I'm buying that is because I think solar in the next 5 years, you come back in 2030, do you think solar is going to be bigger than where it is right now or smaller? And in my opinion, it's going to be bigger. And let's not forget, like these credits are getting cut at the moment. This isn't something that's been around forever. This isn't something that's supported Enphase's business for forever. This was the Inflation Reduction Act, the IRA, in 2020. So this was only a relatively new supporting thing that came in 2 years ago, shall we call it? And previously to 2 years ago, if we go back before 2020, before this Inflation Reduction Act, so let's go back to 2022. The company was still doing okay. The company was doing revenue growth, decent amounts of profit, as you can see here, was able to achieve very good profit margins on these sort of revenue point of view. So it's not like this company's not being successful previously before this situation now. That's something really key to point out. And I think that sometimes, I think that's kind of being lost here, is that, this company's being successful. And when you do look at the company right now, the revenue is double than where it was in 2020. Yeah, granted, the profitability is a little bit lower, but you would hope that as the company scales up with revenue, the profit margins will drag up. And then you do look at Enphase on a share price point of view, and the stock is definitely way lower than where it was before that time. So yeah, where do we want to go from, really? You are kind of getting back to those kind of 2019 prices, really, on Enphase, and it's nowhere near the same sort of company it was a few years ago. It's definitely improved. And when we look at Enphase, we've always got to remember that this company right now is at the bottom of a cycle. Right now is possibly the worst time for solar energy stocks, and that's what I say to you guys, is like, I like to buy things when people think they're dead. They don't want them. That's normally the best time to buy. It's scientifically, it's factually proven that the best time to buy great stocks is when nobody wants them and everybody thinks they're trash stocks, when actually they're just going through a little bit of a tough time. Everybody agrees with that terminology, but the amount of people that actually put it into practice is very rare, that people actually put it into practice. And I believe that's the case with Enphase. I think they're a quality company because I look at them and I think even during this downturn here with Enphase, they're still slightly growing at the moment. Granted that might slow down towards the end of the year. They're still generating 10% profit margins. It's not bad for a dead company, is it? 10% profit margins during this big slowdown. Let's not forget, they're still pretty good on the balance sheet. They're sitting on, there's a little bit of debt on there, but when you look at the cash, they're sitting on 1.4 billion of cash. So when you look at the market cap, they've got over the 20% of the market cap on cash on the balance sheet right now. And they're doing share buybacks. And if you imagine, let's just say they throw 10% of the cash into a share buyback right now, let's just call it 600 million. Right now, Enphase can go buy, 600 million or 10% of the company right now, which is very impressive. So for a company that's having such a bad time to still be profitable, still having 10% profit margins, and still have a cracking balance sheet, it's not too bad from my point of view. And what I've always said with you guys with Enphase is that, from my point of view, this tax credits and these solar credits aren't the make or break of the company. When you look at the last earnings from Enphase, the IRA benefit was in the range of 30 million to 35 million. But you look here, this company is doing 356 million. So it's a stinger that they've lost, 10% of the revenue potentially here from credits point of view, but which, by the way, doesn't even come in until 6 months' time, by the way. It's going to hurt them slightly, but it's not the end of the world. That's what I keep thinking to myself. And like I said, I keep trying to get to this point. I end up getting distracted by the points I want to say to you, so apologies. When we don't, when I talked about Enphase to you guys, is that I said the next 12 months are going to be bumpy because, you got the tariff situation, you got this, the IRA situation going on at the moment. But the two key drivers, you got to look at the two key drivers. And when I talked to you about this one, I said, these are the two key drivers. If these happen and then Enphase still can't capitalize on it, that's when I get worried. And the two key drivers haven't come yet. They're starting to come, but they're not exactly there. First one is oil. So oil is starting to actually tick up a little bit in the last few weeks with what's going on, being at really significant lows for a long time. And as we can see, it's just starting to go up a little bit now. And what is one of the key things, as we saw in 2022, what is one of the key things that gets people to go and get solar energy? And I think the last time we had a spike, maybe it was in this time frame, 2015, 2016, in oil. And you can see here the stock price actually performed very well during that time frame. What's one of the key things that gets people buying solar energy? It's when oil prices go up. It's when energy prices go up, because people go, they sat at home, they see the bill coming up and go, bloody hell, look at this bill. I don't want to be paying this. It just keeps going up. What can I do to avoid doing this? Renewable energy. I'm going to get solar panels. I get solar panels. I don't want to keep paying this. Look at how much my bill's gone up. It's just going to keep going up forever. I'm going to get solar panels. And that's the time where Enphase does well. And if you want proof of that, all you have to do is go back to 2022. And when oil prices went absolutely bonkers, it's the time when Enphase did the best. And so when that kind of comes in once again, that's going to be the key thing. The second key driver is US interest rates. Now, I thought this would benefit them already. So this is one thing where I've kind of this hasn't kind of been gone the line that I thought it would. Where if you asked me 3 or 4 months ago, I thought we would have had interest rate cuts by now, and we haven't. I thought interest rate cuts would start coming in. Um, I thought we would probably have had 2 or 3 already this year, and we've not had one. Now, it's a bit of a subject for another day, but I don't know why we haven't had interest rate cuts in the US. Inflation is at 2.4% or something like that, which is nearly bang on the Fed's target. But yeah, all the economic data has been absolutely dying for the last year, and the Fed have just sat there, which doesn't make sense. Obviously we have the funny enough we have the interest rate decision tomorrow. So by the time a lot of you guys might see this video, you might have seen. It seems like the Fed are going to hold their interest rates again, which is just absolutely bonkers to me, and probably be a video tomorrow where I'm ranting and raving about it, to be honest with you. But at some point, interest rates cuts have to come because the US economy is struggling, and it has to come. And what's the big other difference for Enphase? And we saw that in like the likes of 2020 when really expensive things were basically free money. Is interest rates make a big difference. So if all of a sudden we go from these like 4.5% interest rates down to 3%, and everyone's going, oh, this solar equipment that I used to have to finance, and the finance would have cost me, I don't know, 15 grand altogether. Oh, now it's only going to cost me 10 grand. And if that's going to happen, that's a big change in people's mind. So you go from the point of view where oil goes up, people get fed up with seeing the bills going up and want solar energy, and then also it gets cheaper because interest rates go down. And those are the two key drivers. And that's why for me, I look at Enphase and go, the next kind of 12 months, it could be a bumpy 12 months. I don't know where this stock's going to go. But for me, as I say to you, I'm in this for the long term because I look at 5 years' time, where's solar going to be? I think it's going to be bigger than where it is right now. Political parties might have changed by that point of view. Oil has got to have gone up in that time frame. Interest rates have probably had to come down in that time frame. And those are going to be the key drivers for me, where then I'll judge Enphase and go, right, you probably should have performed well in that time frame. And if it hasn't, then I'll be like, well, that's a bad pick. But those are the key things that I'm kind of really waiting for here. Now, the other thing that I've got to say before I do move on to the next thing is that also, when I do look at the share price, I think this is generally a bit oversold, like 51% down, to be fair. Like the numbers so far this year have actually been not too bad at all. The growth's been good. They still maintain profitability, good balance sheet. I don't think it should have been down this much. And the stock originally, had a pretty poor start for like the first 3-4 months. But then we had the tariff situation, which by the way, let's not forget, the tariff situation looks like we might be resolved. So that initial drop that we had on the tariff news, which wiped about 20% off the stock, and they said that might impact gross margins, that might not actually materialize anymore now. So that could actually be something that's still not recovered on the share price, which might not affect them. And then we had the next drop where we had another 20% drop where we had the news about the potential IRA benefit getting cut. And now today, then we've had the confirmation that it is getting cut, but it's a bit slower than what we thought. But I'm surprised the market didn't already price it in on that drop. I don't really understand. So ultimately, it's dropped to another 30% for what, 10% of the revenue. Seems just a bit overdone. It seems like, it just really seems like nobody wants to own Enphase right now. And it's like, if this is the worst time for Enphase and they've still got a good balance sheet, they're still dragging out 10% profit margins. And yeah, they might lose 10% of the revenue. It's not the end of the world. And especially when you look at the key drivers that, potentially still could come for them, no pun intended. I think this company's still going to have its day in the sun at some point. It seems just such a big overreaction to me. Like I said, I want to make this clear. Like I do believe the next 12 months could be a tough time for it, but I look at the long term and I still think like this company should still do okay in the future. I guess that kind of comes to the point of view like, what is my plan with buying? So I think the last time you probably heard me say about Enphase is like I said I built up a position that I was happy with, and then I've left myself enough room to probably double my position up from where I've built it up, in case it is a choppy time for the stock. Now we have hit the choppy time for the stock, so it's kind of like, do I go buy it? And I've had to give myself like 24 hours thinking time to go, do I just go straight in and double up here, or do I just like buy like 5 chunks over the next couple of months and just wait to make sure the financials are not like completely deteriorating? Is that probably the wise decision to do? And I think after thinking originally, when the drop happened, my thinking was, what, I'm just going to double up. But looking at the situation, yeah, I think I'm now happy at $34 to now start adding back into it. because I don't know how much worse it could get for them now, because they've lost the IRA, tax credits. They've got this tariff situation hanging over them. I mean, how much worse can it get it for them? But yet during that time frame, they've still got a decent balance sheet and still dragging out profit. So I'm like, probably this is a time where I do need to start adding in right now. So yeah, I'm probably going to start actively buying back into Enphase. And I think I'm going to go from the point of view of adding in slowly. And yeah, I think I've got the ability to probably double my position. And yeah, I still think it could be a real tough time for the next 12 months for these guys. So if for the faint-hearted investors that want an easy life, this stock definitely doesn't come onto your list. But I'm willing to take a shot at this one, and I think even if it just gets to some form of level that I don't know, let's go on the past performance here. So I mean, if just from a quick valuation point of view, in 2020 they were able to drag up 24% profit margins. I mean, if they're able to drag up the profit margins to 24%, you're somewhere between a 400 million-ish on the profit side, and on a company right now trading at, and imagine what you can do with 400 million of cash and share buybacks, and that's what, 10, 11 times earnings. Doesn't need much. It doesn't need much to go right here for it to do really well. So, but it is a tough time. So yeah, that's my thoughts on it really. So hopefully there was some useful information on there. Sometimes on videos like this, there's so many different thoughts I'm trying to get to you guys that sometimes I don't know if I say it too clearly about what I'm thinking. But that's kind of my overall thought process. Hopefully that you get there. That yeah, the last not for the faint-hearted. Next 12 months could be a bumpy one, but I still think the long-term goals are there for it, and the two key drivers for it to do well are very much still staring at us to kick on. So yeah, that's my thoughts on Enphase, guys. I hope you enjoyed the video. Let me know what you think of it as well in the comment section as well, guys. Thanks for watching. See you in a bit.